Do we have a resilient market? Good morning, everyone. This is Ahmed Saleh, and this is the weekly market recap. Now, let's look to the last week's summary, key messages. We had another wild week. We started with a big drop behind Trump tariff, and it was recovering very well because of the agreement with Canada and Mexico. We started in a bad note, and then we recovered very well throughout the week. That happened despite that Google, Amazon results were less than expected. They had not a good result, actually. Employment came out mixed, so we had the payroll coming out below expectation, but the market reacted negatively to the unemployment. It was hotter than expected at 4% versus 4.1%, and the market reaction was not that good. On Friday, Trump is still promising more tariff on other countries, especially the European Union and Latin America. So that had a negative effect on the market. But what we have seen that the market didn't go down a lot. The market actually versus last week is less than 1% down with all what happened. So that's why we think that there might be an indication that the market is resilient at this point of time. Now let's go to the details. So overall, it was a negative week due to the employment report, due to the Mag 7, and due to the tariff. But as I mentioned, the market didn't go down a lot. With all this news, we should have seen the market going down by 1 or 2% at minimum, especially because of the tariff. Yes, we reached an agreement with Canada and Mexico, but it's not a final agreement. It's just a 1 month. And with Trump promising more tariff to Latin America and European Union and other countries, then we should have seen the market going down more. Also with the unemployment report, we should have seen the market going down more, but the market is not. That's why we think the market is very resilient. Let's look at the chart for the S&P 500. We clearly are now in a horizontal move. So the market since November is trying to break the all-time high, is not able to, and it's going down, but it's not able also to break the bottom boundary of the channel, and is going up and down, up and down. Let's look at the main events that happened throughout the last couple of months. We see that the market went down after the Fed meeting on December 18th, when they announced that in 2025, there's going to be lower number of rate cuts. They reduced the number from 4 cuts in 2025 to 2 cuts only, and the market reacted very negatively, but tried to rebound weeks after. Unfortunately, we were hit by the hot unemployment report. And then the week after, we got a good news from the CPI. The inflation was not as hot as expected. So this calmed a little bit the market, and the market climbed up again to the all-time high of 6,100. Then the next week we had DeepSeek. Monday started very negative, but then we recovered throughout the week about 50% of the losses. And we were going to recover all the losses, but Trump announced the tariff on Friday at the end of the week, and the market reacted negatively. Started Monday at negative note, and then started to go up again, and ended the week on again a very bad note from Trump promising more tariff on other countries and the employment report. But what we can see here that every time the market is going down, there is a resistance, or there are some people that are buying the dip, and the market start to go up. That's happened after the Fed meeting, that happened after the hot employment, that happened after the DeepSeek issue, and that happened after the tariff. So every time the market going down, there is someone who's buying and that taking the market up. And that's why we are saying the market is resilient. Maybe that's because of the good results of the company. Maybe because of the good expectation of Trump throughout the next years. What we have seen is that the market is really very resilient. We need some good news to break the all-time high and continue the direction upward. So far, this is not happening, but the market is still not going down. So the market is going horizontal way. Okay. So let's move further. Some deep analysis on the what is happening this year. Today we have 50%, more than 50% of the stocks above the simple moving average. So that's telling us that there are more than 50% of the companies are trending upward. Okay, and we have even a higher number above the simple moving average 200. So over the short term and the long term, the 50 SMA is the short term and the 200 SMA simple moving average is in the long term. Both are indicator are telling us that the number of companies above the simple moving average on the short term and the long term are higher than the number of companies below the simple moving average 50 and 200. This is a very good indicator. Also, we have still about 392 companies making new high, and which is higher than the companies that are making new low, which means that the market is still going up. Yes, it's 50-50, so it is not a big difference on number, but not as before. It is not at the 20, 30, 40% above a simple moving average 250. So it's still improving. Now let's look at the year to date. Who are the winning sectors? The winning sectors, we have 4 sectors that are clearly highlighting year to date in 2025: the communication service, the basic material, the financials, and the healthcare. Okay, if you want to invest in these 4, you can buy the XLC, XLB, XLF, and XLV. These are the ETFs that corresponds to these sectors. So it looks like this sector is outperforming the rest of the sector. The worst or the lagging one is the technology, and that's because of the DeepSeek problem. So technology is lagging behind, and these 4 sectors are doing very good. If we compare this with 2024, we'll see that technology was the leading one with 42%. So now it is at the end of the 11 sectors that we have in the S&P 500. Communication service and financials are common. We have it here, communication service and financials. So these are good sectors. I think it's very much okay to go into these sectors. And the newcomer to this are basic materials and healthcare. If you look at last year, where is basic material? It's the last one. Where is healthcare? It is the last one. So basic material was negative and healthcare was almost flat. And these are the ones that are rebounding now. We don't know if this is going to continue or not, but from what we have seen throughout the first 6 weeks during 2025, these are the winning sector, and it's good to be in this winning sector. Maybe not all of them, not all the 4 sectors will continue on the upward direction, but maybe 2 of them will continue or 3 of them will continue. So that's if this happens, it's a good percentage. So that's what I'm recommending for 2025. If you look into the capitalization, we've seen that the large and the mid and the small are outperforming, especially the large and the mid. It is different than last year. If you look at last year, it was very clear. It was the mega companies. Mega companies are the ones above $200 billion in capitalization, and these are mainly the Mag 7. So Mag 7 was leading the market in 24. It looks like this is not what is happening this year, and we have seen all the Mag 7 results are not that good. We are calling them now Mag 1 instead of Mag 7. The only one who's doing good is Meta, Facebook. The rest of the companies are not doing good at all. So that's why we have seen that the mega is lagging behind. Mega is here now, 1.32% year to date. And the ones that are leading are the large and the mid and then the small. Okay, so we want to focus our energy in the coming few weeks on the large and mid and on these 4 sectors. That's where you should be investing. This is what happened in the first 6 weeks. Whether it continues or not, we don't know, but most probably yes, they have a momentum. There is something in them that is making them advancing this year, and we want to be in these sectors until it proves the opposite. Okay, this is the best option that we have right now. Okay, we are moving forward. So as you can see here, some of the analysts are making this comparison between the Magnificent 7 and the other 493 companies that are in the S&P 500. Last year, it was very clear that the Magnificent 7 are outperforming the 493 companies. This year, the difference is not that big as last year. Actually, the earning growth are like more than tripling for the 493 companies, and that's why you see now that the large and mid are increasing in the pricing. So this is again a confirmation that this is where we should be. Mag 7, probably they are extended their gains and they are taking a break in 2025. So let's go to the 493 companies, and especially the large and the mid companies. So the large companies is billion to 200 billion capitalization, and mid are from $2 to $10 billion capitalization. Next week, we have a very important CPI report. The expectation is that it will be 2.9%, same as January, which means that the inflation is now stabilizing. It's not increasing. So last month it was 2.9 versus 2.7, so it was increasing, but this time it will, if it came 2.9 or lower than 2.9, this means it's stabilizing and getting better, and this will be a good news for the market. It will calm the market a little bit. So that's happening on Wednesday. Very important. It's the announcement is at 8:30 US time, and this will affect the market. So you need to be paying attention to that. If it's less than 2.9, 2.8, 2.7, then it's going to be a good news for the market. And we also have the continuation of the result. The season of the result is continuing, and we have several companies that are going to announce the results next week. We have McDonald's, one of the big companies. We have Shopify, we have Coca-Cola, we have British Petroleum. We also have, from the big companies, we have also Reddit, Robinhood app. This is a very important company. Normally it exceeds expectation. Also we have Crocs, Coinbase. These are some important companies, Moderna as well on Friday. So we have a lot of companies that are going to announce results next week. Pay attention to them, and it's a good strategy to be in the companies, these companies, either before or after the results, with a stop loss, of course. So the trading strategy, still the gold and silver are outperforming. The XLC, XLF, XLB, XLV, which is what we talked about the sectors winning this year. The DeepSeek strategy is back again. I'll put a link of the video that I made yesterday on that one. They are rebounding still. And also the results strategy, as we talked in the previous slide. Okay, that was all for this video. Thank you very much. My email is info@thepersonalfinanceacademy.com. If you have any question, you can forward that to me. And if you like the video, please press like and share it with your friends, subscribe, and you can put any question in the comment. This video is for educational purpose only, should not be considered as a financial advice. I might be right, I might be wrong. Any investment you make is at your own risk. Thank you very much, and have a great week and have a profitable trade.